This is Nightly Business Report with Tyler Matheson and Sue Herrera. Funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt, to move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.
We bought a lot more Apple after year-end.
Doubling down, Warren Buffett loads up on shares of the world's most valuable company, and that's not all he's buying.
Budget blueprint. The president is calling for an historic increase in some spending and potentially dramatic cuts in others.
Open house. They're packed, they're competitive, and they may be a sign of things to come for housing's spring selling season. Those stories and more tonight on Nightly Business Report for this Monday, February the 27th. Good evening, everybody. I'm Bill Griffith in tonight for Tyler Matheson.
And I'm Sue Herrera. We start with the world's most recognizable stock market index closing at a record for the 12th straight session. The Dow Jones Industrial Average notched another all-time high. And the last time it did that, 12 straight, was in 1987. The gains, though muted, were led by energy and financial shares as investors want to see more policy details out of Washington. Today, the blue chip Dow index rose 15 points to 20,837. The Nasdaq added 16 and the S&P 500 gained 2.
Meanwhile, investors are getting a better idea of what the president's first budget proposal is going to look like. It is expected to include an historic increase in military spending. And as Eamon Javers reports for us tonight, it will likely also include a lot of spending cuts.
A surprise visitor to the press briefing room today. It was OMB Director Mick Mulvaney, Donald Trump's man who's going to be in charge of slashing the federal budget for non-defense discretionary spending. Mick Mulvaney explained that a lot of the cuts that we're going to see coming from the Trump administration are going to come right from his speeches and from his campaign rhetoric.
When you see these reductions, you'll be able to tie it back to a speech the president gave or something the president has said previously. He's simply going to, we are taking his words and turning them into policies and dollars. So we will be spending less overseas and spending more back home.
So here's the spending that Mick Mulvaney laid out. He said in defense spending, they're going to have about $603 billion. That'll be a $54 billion increase over the previous year. No specifics on what exactly they're going to spend that money on. And in terms of non-defense discretionary spending, $462 billion. That's a $54 billion cut. And of course, the devil's going to be in the details here of what exactly this administration wants to cut. Each of these spending programs, guys, is got an adamant defender out there, somebody who really loves that program up on Capitol Hill or out in the public. All of them will fight to preserve those particular programs. So once the Trump administration signs off on this budget, releases the detail here, it's not necessarily a guarantee that the president is going to get everything that he wants. For Nightly Business Report, I'm Eamon Javers at the White House.
President Trump met with health insurance executives this morning at the White House. Before the closed-door meeting, he told the CEOs that their help was needed to make sure the transition to a new health care system was smooth. The president said Obamacare will implode on its own unless it's fixed.
We must work together to save Americans from Obamacare, and people know that, and everyone knows that at this point, to create more competition and to bring down the prices substantially.
That meeting included leaders from Blue Cross Blue Shield, Cigna, Humana, United Healthcare, and others. 20 million Americans gain coverage under the Affordable Care Act.
And certainly health care is a big issue for our nation's governors. Some changes could potentially blow big holes in their state budgets. And they were at the White House this morning and on Capitol Hill this afternoon talking about all of that. Yalan Mui is covering that story for us from Washington. And what was the message from the governors to the White House regarding Obamacare, Yalan?
There are still some deep divisions within the Republican Party over the path forward for repealing and replacing Obamacare. About a dozen Republican governors have expanded Medicaid in their states, and they're worried now that any changes to the Affordable Care Act could leave them without federal funding and could also leave their constituents without health insurance. One big thing that was talked about at this meeting was a report that was leaked by some reporters that found that repealing and replacing Obamacare, according to the plan proposed by House Republicans, could reduce federal funding by $1.5 trillion over the next decade. States have to balance their budgets, and they're worried without that money they won't be able to do it.
Right. They're also worried about infrastructure. What did they have to say about that and the possible infrastructure projects?
I talked to Colorado Governor John Hickenlooper about this, and he said that President Trump's message that infrastructure spending should rely on public-private partnerships may not go far enough in order to address the needs in his state. Here's what he told me.
You need revenue to pay off those bonds that are at the heart of most public-private partnerships, or to, if the private partner puts in a lot of capital, they've got to get repaid. And they generally want to make 10 or 12 or 14% interest to compensate them for the risk they take. And that's capitalism. That's not a bad thing. I'm hopeful that the president will identify some sources of revenue or some opportunities by which states can get a partner in working on these public-private partnerships.
Now, President Trump did hint that a big announcement is coming on infrastructure tomorrow. That's when he's going to be addressing Congress. We'll have to watch and see what he says. Back to you guys.
Yes, we will all wait for that. Ilan Mui in Washington. Thank you, ma'am.
Thank you.
Speaking of which, investors want to hear more details on potential policy from the president tomorrow night when he does address that joint session of Congress. If he doesn't deliver, the markets could react. But as Bob Pisani reports, that's not the only big event this week.
Traders are trying hard to figure out not just how the Trump agenda is playing out, but also how it collides with another very large object in Washington, the Federal Reserve. And what Trump is saying, or what Trump's associates are leaking out, can't help but make the Fed worried. First, a sharp increase in defense spending. Second, leaving entitlements unchanged. Third, a big statement, as he said, on infrastructure spending. It sounds to many like there may be a big increase in deficit spending coming. So suddenly we have a large tax cut with additional spending heights in the form of defense spending and infrastructure. It's likely the Fed will view that as a notable risk to their inflation outlook, just as it looks like they're finally getting to that 2% elusive target. Now that means it's far more likely the Fed might get more aggressive on raising rates, and that's what's worrying the markets. It brings me now to Janet Yellen. She's speaking at the Executives Club of Chicago on Friday. It will be one day before the Fed enters a blackout period, meaning all Fed officials will be quiet after that date, leading up to the next Fed meeting on March 14th and 15th. So this will be the last shot she has at summing up the state of the economy. Now, here's the issue. Trump is proposing spending programs that seem to imply the economy is weak and in need of help. But Yellen doesn't necessarily see it that way. The economy is clearly in a recovery mode, she's been arguing, and she seems very ambivalent about how much additional fiscal stimulus the economy might need. So what's going to happen? Despite the pressure, most traders expect the president to again be short on specifics. This, of course, makes the trading community completely crazy. It was widely noted on trading desks this morning that two-year yields were up sharply, and one measure of the Fed's likelihood to raise rates in March is now over 50% probability. One catalyst, Fed voting member Robert Kaplan saying sooner rather than later means in the near future in response to a question. Now that tells me that markets are convinced there could be sparks coming very soon between the president and the Federal Reserve. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Still ahead, what Warren Buffett is buying, what he's not, and whether he thinks all of those investment fees are worth it.
It's an annual event investors mark on their calendars, the release of Berkshire Hathaway's letter to shareholders. This year, it did not disappoint. Warren Buffett stuck to business and said the country's best days are ahead of it. The billionaire investor touched on the investing climate and his eagerness to do deals. But the most interesting revelation may have come during an interview today with Becky Quick in Omaha, when he said he's been on an Apple stock buying spree.
You say you're not a technology investor, but you're buying shares of Apple, which is now Berkshire's fifth or maybe even larger than that based on how many that you've put in since then.
I think we had 59 million at year end.
So you've more than doubled it since that time.
That's correct. And we actually, it's amazing how much you can buy of some of these things. So we had bought that, the added 70 million plus. We bought that all by the time they reported their earnings. So it was done probably in 20 business days there.
And their earnings were better than people had expected, and the stock jumped as a result. So
yeah, I don't think they were that much better than people expected. I mean, the company...
stock was up after the earnings report.
Yeah, it did jump, and that's why we quit buying. We would have probably bought more.
You have had times where you thought stocks were incredibly cheap, like in 2008, 2009, when you talked about that. You've thought that there were times that stocks were greatly overvalued, where you've said, forget it, don't do it. Are we near an inflection point right now, as best as you can tell?
Well, measured against interest rates, stocks actually are on the cheap side compared to historic valuations. But the risk always is that interest rates go up a lot, and that brings stocks down. But I would say this, if the 10-year stays at 230 and it would stay there for 10 years, you would regret very much not having bought stocks now.
We haven't gotten the chance to sit down and talk to you since everything happened with Wells Fargo. And we had some viewer emails that came in. Given your ownership of Wells Fargo, please explain your criticism of management, why it's been muted for Wells Fargo versus the Salomon Brothers incident.
Well, I just keep preaching to our guys that if you see a problem, attack it immediately. It isn't going to get better. And a huge mistake was made at Wells, not in cooking up the incentive plans. Cross-selling is fine. I mean, you want to have incentives for people to do it, but you don't want to have it lead to crazy behavior, which it did. And the big mistake was when they found out about it, they didn't do anything about it.
Warren Buffett. Well, Fortune's Susie Garib, certainly a familiar face to all of us around here, has been covering Mr. Buffett and Berkshire Hathaway for years. She joins us now to talk further about the Oracle of Omaha. Welcome back. Wonderful to always see you. Yes. Now, we all know he's a buy and a hold kind of a guy, but once in a while he sells. And we did get news of he unloaded one long-time holding, didn't he?
That's right, Walmart. Really surprising because he's held it for 12 years. And at one point just recently, it was a $3 billion holding, and he's unloaded 90% of it. So he still has a big chunk, but not as much before. And it seems like what he's trying to say is that I am not a buy and hold investor forever. And so he buys stocks and he sells stocks. And it seems like he's also saying that the retailers, traditional ones like Walmart, are having a tougher time competing with online retailers like Amazon. And he's also saying that he's willing to shake up his portfolio. So any stock that Berkshire Hathaway owns could be sold tomorrow.
That's true. You know, he also weighed in on index funds, passive versus active management, and fees associated with whatever type of management you choose for your portfolio. What did he say?
And you know, you guys debate this every now and then. This comes up as a debate on Nightly Business Report, and this has been a mantra with Warren Buffett. But I think this time what was interesting, Sue, was that he devoted almost 5 pages in his 29-page letter to this topic, saying that these hedge funds are charging very high fees for subpar returns. And he's encouraging his investors to put your money in an ultra low-cost fund. And he has proof this time. He backed up his claim. He's had this $1 million bet with an asset manager saying, let's see how the S&P 500 index does over a 10-year period compared to a basket of hedge funds. And 9 years in, the S&P 500 up 85% and the other 22%.
I aspire to be able to make $1 million bet with anybody.
Right. Did he offer any new insights on backing away from the Kraft Heinz offer for Unilever? It would have been a $143 billion deal, but they just pulled out.
Bill, you know that Warren Buffett doesn't like to do hostile deals. He only does friendly deals, and that's why this was kind of so swift. Unilever said no, and they pulled out. So he hasn't said that he has anything in his back pocket, but he is actively looking. They've got Berkshire Hathaway has $86 billion in cash, and here's a company that has $200 billion in revenue, so has a lot of firepower. And I'm sure we're going to see something. That's how Berkshire Hathaway has to grow. We'll probably hear more about all of this at the May shareholder meeting, that big extravaganza in Omaha, if not sooner.
If not sooner. You got your plane ticket to Omaha? You all ready?
Pretty much. I'm all set to go.
Excellent.
I'll be back to report if you're interested.
Absolutely. Will be. Always good to see you, Susie. Thank you.
Same here.
Fortune's Susie Garib joining us tonight.
Well, Sotheby's turns a profit, and that's where we begin tonight's market focus. The auction house said strong demand for art pieces made by David Bowie garnered strong sales, helping that company top both profit and revenue expectations. Sotheby's also said its share repurchases made in 2016 helped its overall results. The shares soared 15% to $46.39. Photo and video company Shutterstock said an increase in paid downloads led to a rise in profit and sales. However, that strength was offset by currency headwinds and higher marketing costs, causing results to miss street estimates. The shares plunged. They were down more than 16% to $43.02. La Jolla Pharmaceuticals said its experimental drug for treating low blood pressure delivered some promising results during a late-stage study. The company said it plans to meet with the Food and Drug Administration to discuss submitting a new drug application later this year. Shares skyrocketed 76% to the upside to $35.12.
Meanwhile, in-flight internet provider GoGo reported a loss in its latest quarter. But those results were still better than expected as the company benefited from higher customer usage. Revenue did rise, and that also surpassed analysts' expectations. Maybe that's why the stock was up 15% today to $10.49. And Armstrong World Industries said that lower costs helped the floor and ceiling maker post a profit that beat street expectations. Revenue did come in a little light, but the company forecast earnings and sales for the year above analysts' estimates, and that sent the shares higher by nearly 12% today to $44.85.
Orders for durable goods rebounded in January. According to the Commerce Department, bookings for long-lasting products rose 1.8%. That's the biggest gain in 3 months, and it follows 2 months of declines. The strength stems from a big surge in demand for commercial and military aircraft.
Contracts to buy previously owned homes dropped last month to the lowest level in a year. The so-called pending home sales fell nearly 3%. They are basically flat compared to a year ago. And as Diana Olick reports for us now, the problem is simple. Buyers are outnumbering sellers in many areas across the country.
These look like they're single pane windows.
At this Sunday open house in Los Angeles, Michelle and Derek Jacob are hoping 6 months is the charm. That's how long they've been competing for a home.
Well, the ones we want seem to be purchased in a snap.
Yeah, over asking price.
Over
most
asking
of the
price.
Time, so.
Well over asking price.
They'll be up against Emily Leach, who in just a few months of looking for an affordable urban home feels like she's seen it all.
We actually had a house that we saw that we really liked in South Central Los Angeles, and we tried to make a move on that, and we got outbid. So, South Central.
With the supply of listings, especially moderately priced listings like this one at near historic lows, the stories are getting crazier by the showing.
Recently, I was at a similar listing that had 66 offers on it. Of course, only one person wins, so 65 home buyers have to restart their home search.
It's not just here in LA. Supply is low across the nation, pushing prices beyond what more and more buyers can afford. Home builders are still operating well below historical averages, and what they are building is not entry level, which is where all the demand is. Close to 1 million entry-level homes were scooped up by investors during the housing crisis and turned into rentals. With rents very strong, most investors are not selling. So buyers today have to be creative and differentiate themselves not just by price, but by personality. Of course, that only works if the seller really cares.
You have to kind of make an introductory letter, little like story about yourself, and you just hope that the home that you're buying is not being sold by a flipper because they are much more neutral.
Even agents are stretched. This is a line of them waiting to submit offers last week. The house ended up getting over 30.
Persistence is key.
And patience, lots of patience.
I think we just have to look and everything
They'll come.
The right one will come.
For Nightly Business Report, I'm Diana Olick in Washington.
So what does all of this mean for housing and the spring selling season, which is upon us? Ralph McLaughlin is the chief economist at Trulia, and he joins us now to discuss how things are shaping up. Good to see you again, Ralph. Welcome back.
Good to see you too, Sue.
So we saw that drop in pending home sales, but apparently that doesn't worry you. Why?
Well, it doesn't really mean much for a couple different reasons. First, January was a pretty bad month for weather, especially out in the West, and that's where we saw home sales drop most. Two, mortgage rates, spiked a little bit that month, and so home buyers may be pulling back a little bit because of high rates. But third, and the thing that I am concerned about is inventory. I mean, inventory is really the elephant in the room when we're talking about what's driving lower home sales, and so that's going to be the theme again of this year's spring home buying season, just like it was last year. But the bad news is that inventory is even lower now than it was 12 months ago, and so that's the challenge that home buyers are going to face.
And they're in a bit of a catch-22 right now. To get more inventory, you need more sellers, obviously, unless you get builders out there. But from the seller's standpoint, they want to see higher prices. And if prices go up and they come on the market, that means they're less affordable for those buyers who are looking at the same time, right?
That's exactly right. And we're really seeing housing market gridlock here because of that. When inventory is low, that's great for sellers, right? Prices are higher, you've got more equity in your house, and it's a competitive market. But at the same time, most sellers also need to buy a house. And so if they are worried about finding another house to buy, they may choose to not sell their home and instead renovate it. And we are starting to see numbers that renovations are up. And so this is really one of the fundamental problems of the housing market, is this gridlock that there really is a first mover problem in putting your home on the market because you can't find another one to buy.
So what do you think will break the gridlock or put the market more in balance?
Well, really three things that we're hoping for this spring buying season. First is that we hope new construction continues to build up, because that is really the only relief valve for the housing market when supply is low. And building now is near historic lows. We're not building as many homes as we used to. We need that to go up. Second, we're hoping that investors actually start to put their house on the market. Many of them bought starter homes during the recession, and that's where we're seeing the least inventory. So if they can put their homes on the market, that's a way that we could see more inventory. And third, and I really hate to say this, is prices need to go up more. I mean, the more that prices go up, the more that will entice sellers to buy. It's not good for buyers, but rising prices should entice more sellers to put their home on the market.
We all know real estate's local. Very quickly, the hottest markets that you're seeing right now, where are they?
We're seeing double-digit price gains in places like Portland and Seattle. We're also seeing upticks in price gains in places like Atlanta and Tampa. But in other very costly markets, such as San Francisco, we're actually seeing price gains that are low. They're near 5-year lows. So really, Northwest and the Southeast are where the action's at.
Well, given the beautiful shot behind you, I can understand why everybody wants to live out there. Thanks, Ralph. Good to see you again.
You too, Sue. Thanks.
Ralph McLaughlin with Trulia. Coming up, the key ingredient that wireless companies need to make money, and it's not new devices.
The world's biggest showcase for mobile devices and wireless technology is underway. And this year, some big shifts are taking place at the Mobile World Congress. John Ford reports for us tonight from Barcelona, Spain.
This week, as the technology world gathers here in Barcelona for Mobile World Congress, it feels a bit like a rebuilding year. The two biggest themes: first, premium content. It's the king now, not the user-generated stuff, and not the messaging apps. And second, faster 5G networks. They're now just 2 years away. Sitting at the intersection of those two are companies like Netflix. CEO Reed Hastings talked here about adjustments they're making for mobile, like recently enabling downloads.
We're big believers in streaming and the internet, but sometimes you're out of range, you're on a subway, you're somewhere where either mobile bandwidth is very expensive, and so downloading's great. The airplane's another scenario for all of you, where it's great just to download some shows and watch them on the plane.
There are new smartphones here from Sony and Motorola, for example, but they're not the focus this year. Virtual reality is here too, but it doesn't have the buzz it once did. It doesn't help that Samsung, the biggest brand in the mobile world, is having an off year. Instead of its usual annual presentation Sunday night to launch a new phone, it showed off a tablet and a PC. Let's face it, this isn't what we've come to expect from Samsung, the biggest smartphone and TV maker in the world. Arguably, the most exciting parts of the presentation were the beginning, where they apologized for last year's phone, and the end, where they promised that this year's innovation is coming next month. Another reason the focus is turning to movies and shows, it seems everyone, including the wireless carriers, view them as a key ingredient for making money.
Content models are changing so rapidly. You need to own content to be able to innovate in advertising, innovate in monetization, and innovate in the types of content, the forms of content you bring to an end user.
That's important no matter what the size of the screen you're watching. For Nightly Business Report, I'm John Fort in Barcelona.
Oddly, I didn't hear anything about my BlackBerry.
No. Funny.
I don't believe for a second that BlackBerry has a 0% market share in the world. I have one still.
All right. That'll do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great week, great evening, everybody. We will see you tomorrow. Good night.
Nightly Business Report has been funded in part by...
All it takes is a spark. One idea to take flight. The courage to seek the unknown. To innovate, disrupt. To move us all forward. To explore a different perspective. At NASDAQ, we connect the world. Its ideas, its capital, its businesses, the people that drive global economies. The future isn't tomorrow, it's right now. All it takes is a spark. NASDAQ.